Hello friends, in this video we are going to discuss in detail about the latest IPO, which is Mindspace Business Parks REIT's IPO. If you haven't subscribed to my channel, please do subscribe right now and join my Telegram channel. Let's get started. So what is REIT? Real Estate Investment Trust. REIT is like a mutual fund. In a mutual fund, people invest their funds and the mutual fund manager invests in stocks or different securities, and whatever is the profit, he distributes it to the unit holders. Similarly, in a REIT, people invest their funds and the manager invests in real estate properties and makes money or profits through rentals and various other revenue sources, and whatever are the profits after their expenditure and further investment in new properties, those profits are redistributed among the unit holders. So this REIT is a trust. It is not a company which you are investing in. Although it is listed on stock exchange, you will be buying units of the trust. You will not be buying shares of the company. At the background of this REIT, Mindspace Business Parks REIT, there is a big company called Raheja Corporation. So the Mindspace Business Park REIT IPO is managed until now by Raheja Corporation, which is one of the biggest real estate companies in India. So this particular REIT will have only selected properties under its portfolio. They will have properties at 4 locations, and which are the major cities like Mumbai, Hyderabad, Pune and Chennai. And the total leasable area right now under this portfolio will be 29.5 million square feet. So there's a huge space, commercial office space like business parks, IT parks, which they will be leasing under this particular REIT trust. There are 5 integrated business parks under this portfolio and 5 quality independent offices. These kind of offices are suitable for multinational companies and big corporations in India also. So the Mindspace REIT was formed under Indian Trust Act 1882 on November 18th, 2019. So if this REIT is formed in 2019, then how come it has a history of maintaining such big business parks? Because all these properties were managed by the Raheja Group, and that particular group has selected some properties to form this REIT, and this REIT will be managed by a limited liability partnership. So I will explain you in detail. So REIT was registered in November 2019, and with SEBI it was registered in December 2019. So it is a recent incorporation. So what will happen? Selected properties will be chosen. REIT will form, those properties will be covered under this trust, and this trust will be managed by a limited liability partnership. So who will be the partners of the limited liability partnership? Mr. Ravi C. Raheja and Mr. Neil C. Raheja. The people who are the promoters or the managers of the Raheja Group, they themselves will be the people who are managing this particular REIT. And so there are 2-3 broadly components under the structure. One is the manager who manages the REIT. One is the sponsor who will invest primarily in the REIT. So sponsor is the Raheja Group. Manager is this Raheja Corp Investment Managers LLP, who is managing this. And there will be trustees. The trustees are Axis Trustee Services Limited. What will these trustees do? These trustees will keep an eye on all the regulatory compliances. They will ensure that the manager is managing the REIT properly. And the fourth people are you and me, the investors. The auditors are Deloitte Haskins and Sells. So broadly there are 3-4 parties to this arrangement. And this investment will happen through the SPVs. What are SPVs? Special purpose vehicles. These are companies, whenever there is a new project, they establish a new project, let's say in Hyderabad. So for that particular project, they'll form a separate company. In Bangalore, they'll form a separate company. In Delhi, they form a separate company. So the entire profit and loss and all the financials are maintained separately under that particular company of that project. So that is called a special purpose vehicles for that particular project. So they are combining several special purpose vehicles, several companies, and bringing under one group, and they are registering it as a REIT. So the major investors will be the Raheja Group, people like you and me, and other FIIs. This will be managed by the manager, who will be a partnership firm like a LLP, who are managed by the two Raheja partners, and the trustees will be the Axis Bank trustees. If you further have doubts about this, you can leave in the comments. I'll clarify later on. So under this particular LLP, there will be a team who will be managing. The team will be comprising of CEO Mr. Vinod Rohira. He is instrumental in leading development. So he has a lot of experience in working with the Raheja Group earlier. CFO will be Miss Preeti Chadda. She also has a lot of experience working with the Raheja Group. The Raheja Group is a leading real estate developer in India since 40 years, and they have more than 9,300 employees. So there's a strong company behind this particular REIT. If you see the structure now, it will be more clear to you. If you see in the center, there is a trust. On the right side, there will be a manager. The manager is K. Raheja Corporation Managers LLP. The partners of this LLP are those two Raheja partners. Then there is a trustee on the left side who will be monitoring the manager who is managing this trust, the REIT. And under this, there will be separate SPVs like Raheja IT Park Hyderabad, then Sundew Properties. Like this, there are several SPVs under this particular REIT. So indirectly, you are investing in all these particular companies who are coming under the trust, which is the REIT. Now, what are the investment conditions? There are, the REIT is the REIT is covered, or the REIT is regulated by a lot of things. So the investment conditions, the REIT cannot invest wherever it wants. It has certain conditions for investment. The investment is minimum 80% of assets in completed rent generating properties. It has to invest 80% of the funds in such properties which are regularly generating rents and incomes. Remaining 20% it can invest somewhere else where, like under construction properties, debt of companies who are in real estate, equity of companies who are in real estate, mortgage backed securities, money market instruments. So indirectly, the remaining 20% is also going into real estate business, but direct revenue generating, rent generating should be minimum 80% investment as per the REIT regulations. So minimum 51% of the income should be from rental or leasing. That is also another condition under the REIT regulations. The manager should ensure that all these things are managed and followed, and they should report to SEBI from time to time. So you understood the business model already on a broad basis. This REIT will have well diversified 172 tenants after it is formed, and 85% of the revenue will be from leading multinational companies, 39% from Fortune 500 companies. They'll have clients such as Accenture, Qualcomm, JP Morgan, Amazon, UBS, Capgemini, Facebook, Barclays, and many more. So based on these, you can understand that this particular group is quite successfully running its IT parks and other investment areas, and a lot of big companies in the world are using their properties. So this is the portfolio which will be coming under this particular REIT arrangement. Mumbai, Hyderabad, Pune, Chennai, 4 key locations will be coming. Under the Mumbai location, there are certain properties: Mindspace Airoli, Mindspace Airoli West. Hyderabad, we have Mindspace Madhapur, Mindspace Pocharam, Pune and Chennai. So if you stay in these cities, or you happen to go into these cities, if you have seen these properties, you yourself will know the quality of construction and the quality of infrastructure and management they have. I have personally been to this particular properties in Hyderabad for audits, and they are maintaining it very well. So the type of assets are business parks and independent offices. The total leasable area breakup is given. A total comes to 29.5 million square feet, and committed occupancy, that means on an average basis 92% of their properties are occupied, which is a very decent number. Weighted average leasing expiry, this means that the leases are renewed on a periodic basis. So generally they enter into between 3 to 5 years, or sometimes even longer. So the present occupancy of 92%, from now on, if you see, minimum period of average 5.8 years, these are all the existing tenants are going to occupy the same properties. So this gives us an assurance that there will be regular income for the next 5.8 years on an average from existing tenants occupancy. Now understand the market and the industry in which this company or the trust operates. India is emerging as a leading hub for technology and corporate services, as you all know. There's a lot of cost advantage in India in terms of real estate and other aspects like employment, employees, etc. In India, there are top 6 markets which are Chennai, Pune, Mumbai, Hyderabad, Bangalore, and Delhi. Out of this, 4 are already entered into by this particular REIT. And the Indian offices are moving from individual spaces to IT parks. People are preferring to work or take offices in these IT parks or the SEZs instead of business parks, instead of having independent offices like earlier. So the trend is giving support to this industry. The CAGR of rentals on an average growing at a rate of 5%, which is again very decent every year, and the demand of quality office spaces are increasing, as you already know. What is the competitive advantage or moat which this particular trust or the properties will have when compared to the other properties in different cities? Replicating their portfolio will be very difficult because they have built this portfolio over several years. The construction and the building of the infrastructure will take a lot of time. So that is a competitive advantage. Wherever they have already made these properties and IT parks and SEZs, getting the same size of area in that same area now is very difficult because the cities have expanded. So that is again an advantage to them. They have long-standing relationships with their occupiers. People don't want to vacate their properties, and they have a very high standard of infrastructure and the community culture they have built in their business parks. They have large scale and high-end infrastructure facilities, and they have become they have landlord of a choice for this multinational companies. They have very well diversified portfolio of tenants, and they have long relationships with their tenants, and their cash flows are quite stable as their occupancy rate on an average is right now 92%, and they are already they already have presence in the 4 major commercial properties markets in India, as we have discussed. What are the growth prospects going in future? The growing market size in India due to domestic and in fact international companies coming to India, the demand and the market size is continuously growing. There is increase in the rentals every year, as we have discussed. The vacancies are low. Most of the properties are occupied. As on March 31st, 92% is the occupancy rate. The weighted average lease expiry, as we discussed, is 5.8 years. So there is an assured income for the next 5 years. The leasing out of vacant space is going to be quick, and the empty spaces are going to be filled up very soon. The escalations on an average every year are about 4 to 5%. The whatever lease expiry is happening, the new agreement they will be entering into as per the present market rates. So automatically their revenue will increase by marking the rents to the market rates. The new constructions will happen within their spaces, because whenever they take a space, they will not construct it fully. They will have open spaces as per their designs. So they will go on keep increasing the areas of leasing, that will increase the revenue automatically, and they will also be adding more locations in same and different cities. So these are the different avenues of growth of this particular Mindspace REIT. If you see the net operating income, they are expecting or projecting it to grow by 59.2% in the next 3 years up to financial year 2023, which is a very strong projection. This will be increased due to the reasons we have discussed earlier, due to the existing contracts, the leasing up of the vacant area, which is right now the marking to market of the existing leases which are expiring, and also increasing the construction in the existing business parks. Now there are several risks when it comes to different IPOs, so I will also discuss the cons, just not talk about the pros of this particular IPO. The distribution to unit holders as required by the REIT terms may not be exactly the same. Depending on the cash availability, the distribution of dividends might be lesser. COVID will have definitely good impact on this, which we will discuss in detail in the coming slide. The performance of commercial real estate market as a whole will impact this particular REIT drastically. There will be a significant revenue derived from limited number of tenants, which is a risk because the entire building may get vacated if a big tenant is lost. This particular REIT doesn't have an operating history by itself because it is a new entity being created by combining several special purpose vehicles or companies, and there may be legal issues because it's a real estate sector which may impact this particular business. This particular business is dependent on totally the, or most of it is dependent on the rental income. About 139 crores of contingent liabilities exist. If they materialize, they have to pay that much money. Mr. Ravi C. Raheja and Neil C. Raheja, the directors of these SPVs, they are facing some legal issues, small legal issues due to disqualification of being directors, because in the old few companies they have not filed their returns to the registrar of companies in time. About 200 crores worth of litigations are going on against this particular different companies, wherein there are regulatory actions expected if they have to pay that amount. Service providers may give some benefit to particular holding group, the Raheja Group, indirect benefits to them, because this particular REIT will have only selected properties, all the other properties are with that particular group. So directly, indirectly, that group may get benefited by having this particular arrangement with the different service providers in this particular business parks. Several regulatory compliance keep arising, tax regulations keep changing. Because of that, there may be an impact on the profitability. They will have different joint venture agreements, partnerships with different companies and people. If there is any dispute in that, that may impact the REIT financials. In the last 3 years, there are some milestones achieved. They have leased about 7.6 million square feet office space to about 60 tenants. They have grown the portfolio by 4.9 million square feet, maintained 92% occupancy rate, and the average CAGR of rental growth is 6.7, which is more than the market. The facilities upgradation has taken place in different properties, and they have invested 73.7 crores in upgrading their facilities. If you see the committed occupancy, over a period of time, the lease area is continuously increasing, but the occupancy rate has slightly fallen down every year, which is still decent. 92% is still decent, but it has fallen down a little, which can be a little concern. In place of rent, if you see the per square feet rent from the last 5 years, it has increased from 40 rupees to about 51.8 on an average, which is a good sign. Historically, if you see the expansion which is happening every year, they have been adding the more and more area under lease. Financial year 16, they did 0.9 million square feet, 1.7, 1.3. Financial year 2020, they have done 3.3 million. And there are some under construction projects already going on. Financial year 21 and 22, they are expected to do 2.0 and 0.7. So there is more growth coming in the next couple of years also. What is the COVID impact on this particular business? All the properties of this business are in India, so that will have a direct impact. There are limited people working in different companies for limited hours. There are disruptions in the construction because the labor has gone down to their hometown. There few tenants are being impacted by the ability to pay their rents, but overall they have informed that they have collected 99.4% of the rents for March 2020. So they have almost connected everything for March. For April, 97.8, and for May, 95. So there is an impact, but there is not a major impact of COVID right now. But going further, how much there will be the impact, they cannot estimate right now. April 2020, they have even shown a slight growth of 0.7 million square feet of increasing the areas, leasing new properties. So they, from their side, if they have to pay any finances or money to anybody, they have not asked for any deferments of moratorium, which is again a good sign. but the actual impact in the next few months we'll get to know as the time passes. On overall basis, let us review their balance sheet. The property, plant and equipment, they have about 145 crores, and the investment property is about 5671, about 5,500 crores, and under construction is about 1772 crores. They have about loans, cash and cash equivalents of about 220 crores, and in terms of equity capital they have about 550 crores, and in terms of borrowings they have about 6356 crores of loans. So since it's a real estate business, obviously loans will be there, but with the IPO proceeds they are going to pay back certain loans which we are going to discuss further. If we see their P&L account in the last 3 years, in 2018 they have done a revenue of about 1263 crores, which is increased to 1431 in 19 and 1766 crores in 2020. So there is a very decent growth in the revenue. In terms of profits, they are doing very well. 161 crores were the profits in 2018, increased to 515 in 19 and increased to 51, maintained the same level of 513 in 2020. These particular financials are not for the REIT, but all the companies which they are covering under REIT, they have combined their financials and made this particular financials for our understanding. If you see the net operating income, these are the projections of future. In the financial year 2021, 22, 23, they are planning to do a net operating income of about 1348 crores in 21, 1707 in 22, and 23 they are planning to do about 1951 crores. In terms of EBITDA, they are estimating it to be 1373 crores, 1551 crores and 1764 crores by 2023. Now coming to the net distributable cash flows. Why is this particular figure important in this type of business? Because this is what is going to be distributed as dividends to you and me. So in financial year 2021, they are estimating it to be 573 crores. In financial year 22, they are estimating it to be 1223 crores. And in 23, they are estimating to 1306 crores. So this particular thing will be distributed among the unit holders as dividends. So now how will be the dividend distribution policy be? The manager is required to distribute 90% of the net distributable cash flows. What is net distributable cash flows? Whatever income they are earning after all the expenses, revenue expenses, and after all the reinvestments which they want to do, or they want to pay back their loans, whatever money remains is a net distributable cash flows. They have to distribute that every quarter, and they have to declare how much they are going to distribute, and within 15 days from declaration they have to distribute it. The calculation of this NDCF is also specified by the REIT regulations. As per that method they will be calculating it. So this particular concept, if you observe, is quite well regulated by SEBI and the REIT guidelines. Now coming to the final IPO figures, the total money they want to raise is about 4,500 crores, out of which 1,000 crores will be through the fresh proceeds and 3,500 will be the shares sold by the Raheja Group and Blackstone to the other parties. This IPO opens on 27 July, closes on 29 July. The price range is 274 to 75. The lot size is 200 units, so you can buy in multiples of 200. 75% is reserved for institutional investors. They have allocated 5.52 crores of shares for anchor investors, which is already done. So if you see, the anchor investment is done and very good names have come as investors in the anchor investments by FIIs like Singapore government and funds managed by Nomura, Capital Group, Fidelity, HSBC. So there are good people who have already come into the anchor investment round. In DIIs, they have Access Mutual Fund, IIFL, Special Opportunities Fund, ICICI Prudential Mutual Fund, Max Life Insurance, Star Health and Allied Insurance, and few others. So if you see India and abroad, there are good institutional investors already who have participated in this IPO. Rupees 1125 crores through strategic investor in allotment is already raised. So what are they going to do with the money which they are raising through this IPO? They are going to utilize it for the paying back of their existing debts which are there in the existing special purpose vehicles or companies, and they are going to use these funds to buy the non-convertible redeemable preference shares of their own group company, which is Mindspace Business Parks Private Limited. And for other general purposes, they are going to use the IPO proceeds. So this is about the Mindspace Business Park REIT IPO. It's overall, I feel it's a good IPO. It's an indirect way where you are investing into real estate through buying these units. It's going to be a regular income kind of a thing if you are getting quarterly income in the form of dividends. So for people looking for regular dividends, this is a good chance. There are good growth projections, and the past performance has been good. The management is experienced, and they have a lot of brand value in the market. The industry is growing. There may be a temporary impact due to the COVID, but in the long run, the commercial spaces, the business parks industries, as you know, they are growing at a decent pace. For long-term investment, I feel this is a good IPO, and this is evidenced by participation by the lot of big names in the anchor investments round. So thanks for watching this video. I hope you like it. Subscribe to my channel and support me, and join me my Telegram channel. Thanks for watching, and all the best for the IPO, and have a great day.